Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, September 20th, 2021. We're going to start out here with the long-term charts, the weekly charts, because that just started focus on that last week with our sell signal. And so this just kind of paints a bigger picture. At least for me, helps formulate my trading plan, whether I go into very active swing trading mode, trying to cover, those shallow targets or hold out and let some swing positions run for maybe longer term more downside. And that's what I'm looking at here. I see this weekly chart. There's that trend line mentioned last week, long-term primary uptrend line. There was the sell signal, which was confirmed last week. We had a solid close below the trend line. We'll zoom in nice and tight. There's a red candle and follow through today. And that's what you get. You also had the crossover in the PPO right there, first one in a while. And as I went over, those are often, not always, but quite often, the big corrections come after you get those crossovers, like that big drop right there. And the COVID lows 36% in the S&P. I think the Nasdaq was a little less than that. So again, that's long-term stuff. Now we'll zoom all the way down to the 60-minute charts, which is kind of for more active traders and or to help hone down those entries and exits for the less active swing trader or investor. This is what we had on the 60-minute charts. It's a much shorter uptrend line, formed a bearish rising wedge, gave us our sell signal back here a couple weeks ago, and that's it. So this has been covered quite a bit lately, bounced around in that range. Then we had our next sell signal on the break of that support. Then you had multiple opportunities to short again on the back. Well, actually, there was a back test that day, highlighted there. This one was highlighted. That one was highlighted. That one was highlighted. Then we went up in this. Once we broke this trading range, which was on Friday, that was your next sell signal. And look, we closed right below it on Friday, and then boom, and gap down below T1. So effectively, T1 was hit. There was an opportunity this morning to short again, and we consolidated under there and couldn't recover it. And that's the way it works. Is each target you're likely to get a reaction off that level, but in this case we gap right down through it, so we never had that reaction. We traded a little bit under there this morning. Bulls certainly had the opportunity, the buyers, to step in. Maybe this could have been a momentum fueled overshoot, right? With a gap down, there's nothing more as far as downside momentum than a gap. But they couldn't do it. And it just shows that, the supply-demand dynamics, at least at this point in time, have shifted. We'll see. I always say one day doesn't make a trend. But all I can say is that is certainly another check mark, like all the others that we've had here along the way. And that should open the door for T2, as I said this morning, if we didn't recover that level. So T2 is right here. Runs down from about, we'll call it about 361, give or take. Watch SPY, watch the futures, ESNQ, the VIX. I'll get to that in a second. That should be coming up on my first target right now if it hasn't hit it already. So that's that. SPY. We had different targets on SPY and QQQ. SPY gap down below T3. T3 was, remember, that bottom purple line. So I had the number, the level was at 435.93. So I put that third target at T3 at 436. And boom, we gapped down right to it. Again, that is where, quote unquote, the buyers should have stepped in, but they didn't. And because they didn't, again, it shows that supply dynamics have shifted. And just don't forget, things I've talked about for months, all the hot air in this market, divergences building, extreme sentiment, bullish sentiment, negative breath, et cetera, et cetera, et cetera. And the margin trade, the very high, record high margin balances. And what that means is if you're ever going to get the setup where you're going to get one of those big drops in the market like we have every few years, it's nothing new. We've been having big, even within the bull market, big corrections. If you want to call them that, you can call them micro bears, whatever you want, just like last year, when COVID hit. But those are the conditions, again, that they come from. You don't have those big sudden drops without those all those conditions pent up, everything I just mentioned. So all right, so we're coming on. I give you additional targets on SPY today since we gapped down below 436. never took it back. That becomes resistance. T4 is 431. That's the next target. So we are coming up to support. At this point in time, I believe there'll be more downside based on what I just started the video with, the long-term charts. So bounce back to that level. Let's just talk about where you might, if you're trapped into longs where you want to get out or add to shorts, of course, a bounce back to that 436-ish level. And then there's also a big gap. If we get more than that, if the buyers come in and we get a nice rally, and that's what you get when volatility spikes. It goes both ways. Downside, usually you're going to see the VIX spike when the market's correcting, but volatility is high, so you're going to see bigger swings now. The counter trend rallies are going to get powerful. Maybe not for a while. Maybe today. Who knows? All I can tell you is where these support levels are. All I can tell you is that we're very oversold on these intraday charts. So, like I said, my opinion. This you had multiple shorting ops here. That's just me. I don't like to short such a big drop in oversold conditions because the odds are, market's like a rubber band. The more stretched it gets, the more it's going to snap back when it finally does. So that's it. Those are your levels. And there's a little thin zone here as well. So I think we'll get a reaction. Certainly today, if we get there, 431 or even close to it, probably have a reaction there. Maybe consolidation, but most likely a bounce. We'll probably see some dip buyers step in here soon. And then work our way back down. Next target again is 426. Let me go back to QQQ and just see how close we are. Yeah, you can see we're very close to support. So, would be perfect. The market doesn't always give you what you want, but one more thrust down. I know we're really stretched. We're down about 2.6% on the Qs right now. By far the biggest drop in a while. Down about 2% on SPY. Daily charts are ugly as well. Trend line taken out on SPY. You can see a clear sell signal. And, just looking at this daily chart, okay, put those 60-minute charts aside if you don't want to try to, play all the squiggles, the, zigs and zags. This is most likely we're coming down to about 411 on SPY. You have the 200-day moving averages, both the simple and exponential, right at that level right now. And there is some. Let me give you one more line here. There's certainly some support levels on the way down, minor support, but that's where I think we'll probably end up in the coming days to weeks here, and that's about another 5.5% lower. And again, minimum. I could easily see us working down here to this 397 target based on the sell signals on the weekly chart. Daily chart of QQQ. Yeah, I don't see much stopping this market until we get down here to about that. I'm gonna add one more line here. You can see on my daily, the first support I have is about 343.45. I'm going to put a line right here. There's also some support there. So call this a target zone, 343.45 down to about 333.50 or so. You also have the 200-day moving averages right here coming in together, simple and exponential. So they'll come in around that level. That gives you as much as another also about 5.5 to maybe 7% downside on the Qs. So again, if you don't want to, you want to sit tight, now's a great time in my opinion to ride out the counter trend. Rallies is the best sell signal we've seen in a long time. Those are your targets where I think we'll almost certainly get the buyer stepping and get a tradable bounce. It would take really a market breaking down, some kind of crash, some hedge fund or something blowing up, massive unwinding, and we'll get that at some point. Whether this is just maybe a little correction with a little more downside to come or not, but at some point the margin bubble will be unwound, and that is a vicious cycle once it begins. Selling begets more selling, because especially the massive amount of inexperienced traders in this market with the advent of Robinhood and all these other online trading platforms and people buying crap stocks without any fundamentals. And again, it's the fact that they're on margin when those accounts start to get compressed, when those stocks start coming in. Like I told you, for example, GameStop, AMC I mentioned last week is another objective short entry right here. Bounce back to 51.22, and then the break of the trend line, beautiful sell signal. And these are the meme stocks that I'm talking about, and that's 23% drop since we hit that resistance level last week and then broke the trend line. So, and again, I have just a lot more downside. We already hit my first target way back here. My next target's all the way down here between, it's a zone about 1750 to 20. And where I'm getting at is, there's a large number of the Reddit crowd that's still loyal to this stock, still thinks it's going to the moon. And if it hits my target, it's going to drop another 50%, and that's going to most likely trigger some margin calls. On the 60-minute chart, however, a lot of things coming up to support right now, including AMC. It just hit this 39.86 support level right there, so we may bounce. And as I showed you, the markets are not too far above support now. So if nothing else, if you're an active trader, time to be covering those index shorts or at least trailing stops down. Certainly not, I wouldn't be shorting right here, right now, not today. And then boom, there it is, VXX, first target hit. There's the breakout. It's a nice setup. I could have gotten this front of this one because the index markets already broke out. Plus, remember, the VXX, the VIX itself is the index you want to track. This is the proxy, one of the proxies you can buy. So if you went home long into this, if you bought the VXX anytime after we had the sell signals in the last few weeks, as I said, the market was not responding to those sell signals, and that was a great opportunity. You don't always see that. Usually when the market starts to correct, the VIX takes off. So you had a couple weeks of opportunity here, and then boom, just since Friday's low, this one's up 23%, and at my first target there, 30.79. Next target's still 34.87, and then 42.33. And again, we'll watch the VIX itself. And those targets may need to be revised, but that's what the VIX itself looks like. Right at resistance right now. A little bit, it's not super well defined, but I've had a line here for a long time. That line at 25.58. So there it is. We're all there. If the markets take that final jog down to those levels I showed you before, we may spike up there, but I also wouldn't be surprised if we overshoot this and just have a consolidation around here. But based on, again, the longer term charts, tells me the VIX probably got plenty more upside to go. And crude oil, still very much like this one, still a short trade. This is what I believe to be a long-term major top back here. We've been zigzagging lower, as I've talked about, zigzag, 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 still below that previous low. Put in some divergence, reached a pretty big divergent high. And if the stock market does continue lower, especially in the coming days to weeks, as I suspect it will, we're going to head down in crude quite a bit more, most likely, based on both the fundamentals and the technicals. Technicals chart, again, this is only a 60-minute chart here, but I made the case for a major top on the long term, the daily chart, or even the weekly chart it might have been. And then on a related note, and they don't always move together, but quite often they do, is natural gas. Also case for a significant top on the long-term charts, long-term resistance that it ran into, but this is a 60-minute chart, and then just last week we had this sell signal here, a break of the trend line, and it appears to be flagging, so I still maintain a target down here, this uptrend line right there, and that would, with this little snapback rally, this one is objective to short because it's up today. Or was up. It's almost flat now. It's down slightly, but still about another 16% or so until that trend line is hit, if it is hit, that is. Like anything else, spread it around. Don't put all your eggs in one basket. That's why I like trading various commodities. Lumber not doing great today. Certainly down, but still above the trend line. This is LB Lumber Futures 3-month chart. 60-minute candles. There's that primary, or the near term, I should say, uptrend line, but it's still in an uptrend and still, well above the breakout above this bullish falling wedge right here on the 60-minute chart. So we already hit that 691.80 target, and so if the buyers can step in. Is it good the stock market's down? No, that was always been my fear, but lately, at least for months now, there's been an inverse relationship between lumber and the stock market. So the other day we popped when the market was down, and so it wouldn't surprise me if we continue up if the stock market corrects. Nor would it shock me or surprise me if we break down, because sooner or later that correlation will return. But as of now, from the technicals, it looks fine as long as we stay above that trend line, and especially that 550 level. That's pretty big support. Anything below that is just not good from the charting perspective. All right, I'm going to keep the video short, wrap it up here, and just loop back to a couple of the ETN ideas. Now, this is, I already covered oil a minute ago with CL crude futures, but this is the proxy for those of you that don't trade futures. I've laid out as a trade idea, SCO. Remember, we already hit our first target, although it made a marginal new low. Crude never did, and I talked about that. That's because this is an ETF and it's inverse. 2 times. That's supposed to be a 2 right there. And because of that, you get decay. So crude oil is still off the multi-year highs or the 52-week high. And this one, for all intents and purposes, that's just we're still at the bottom there. I still like it. We already hit T1. If you're just active trading, if you took profits when the first target was hit, you could swing back up. That's still the we could make that the first target again, or I'm sorry, the next target. But the fact it was already hit when we get on through there, and again, I'll update this day by day. The charts can change, the market can change, the technicals, the outlook for crude can change. But as of now, I suspect if we get on through there, we're going to continue up and hit my next target zone there, about 25 to 26.50, and then that third and final target zone's up there about 30.85. And the other one was EMT. Well, one of the other ones for ETFs, EMTY. I still very much like it. It's not taken off, but it's certainly, looks constructive. This is a one-time inverse short ETF for the retail sector. But again, it doesn't have Amazon, doesn't have your online retailers. It focuses on shorting retail storefronts. And still looks good. A lot of upside potential in this one. Just focus on these near-term targets for now, and then you want to watch XRT as well. That's the retail sector ETF, non-leveraged, and this does have Amazon in it. In fact, Amazon's a top holding. But with the market breaking down, that should put pressure on the big fangs, including Amazon. As good as a company is, when the market's correcting, there's forced selling, and the good get dragged down with bad. All right, so that's it. Big resistance up here at 98.36, give or take. It has not been able to take out. And if you look at it this way, we've been in just a multi-month consolidation range. So really, once we can break that, if and when we break that, that should bring in the sellers into XRT, and then that EMTY should do well. Or you could just short XRT either way. Okay, let's wrap it up here. So again, markets are coming up on a decent support level, oversold for the day, and we'll pick this up either tonight if I see anything big by the end of the day, or if I come across any other trade ideas. I'm kind of watching the cannabis stocks as potential long setups now. Pointed out was proved to be a nice top on those back in February 10th, I think it was. But I think that correction's come full circle. So I'll do that in a separate video. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.